Perfect.
I'll wait till you.
Okay, welcome everybody. It's just about 1 p.m. I'd like to take this opportunity to welcome David Irwin and Joseph Collins from our auditors, Adelson and Company. And I'd just like to introduce everybody that's here. We have Michael Canales, our town administrator, Cheryl Allen, our accountant, Diane Rouse from the Finance Committee, Bill Vogt from the Finance Committee, Jim Belfant from the Finance Committee, and Erica Olson from our treasurer, and Neil Holden from the Finance Committee. So, and myself, Jay Bykowski.
Forgot him.
I'm sorry, Steve and Steve Schapp. I was going around, forgive me. The Stephen Schapp. I apologize. Listen, it's a good thing
for that one.
It's a good thing. It's a good thing with all the names here. I didn't forget anybody's name. So
You know what day it is today?
is it day or is it night? So welcome everybody, and at this point I will call on David to kick it off and tell us how you want to best proceed.
All right. Well, I guess we can go through the audit. So everybody hopefully has a copy of the financial statements. It's the largest document. I have one extra copy. Do you have a copy, Erica?
No, that'd be great. Thank you.
And maybe Cheryl can look on with you, Joe?
Yep.
All right. I have an extra copy here. Figured Erica was going to show up, so I decided to.
Thank you.
Okay. So if we turn into page 2 of the financial statements, it says independent auditors report at the top. And this is the,
That's page 3.
oh, page 3, I'm sorry, yes. So this is the opinion that comes out of our office over your financial statements, which is really what the town is paying for us performing the auditing services. And it points out that we audited your 2021 year. Points out that management here at the town is responsible to make sure that these financial statements are in accordance with GAAP, which they do. It points out our responsibility as your auditors. We've got to conduct the audit in accordance with the auditing standards that govern our industry. We also have to comply with government auditing standards because we're a municipality. That obviously holds us as your auditors to a higher level of education and internal control at our firm. And one of the things that we have to go through in order to be able to do these kind of audits is we have to go through an audit ourselves, which is done once every 3 years. They call that a peer review. And it's done by the AICPA, or it's done by another independent CPA firm. And they actually review those audits and decide whether or not they're going to give us a pass or a fail. So luckily we have a pass. We can still do your audit. And then at the very bottom of that is the opinion that we expressed. And we expressed what's called an unmodified opinion, meaning a clean opinion. Meaning we didn't have any material weaknesses, significant deficiencies. Your financial statements are in accordance with generally accepted accounting principles, and they accurately present your financial position as of June 30, 2021.
Can I ask you a question about GAAP?
Yep.
Because there's a reference to us not using GAAP.
So the municipalities, they follow Massachusetts accounting rules internal, and those are called the Uniform Massachusetts Accounting System rules. And that's a modified GAAP basis of accounting. And the modified GAAP basis of accounting statements are included in these ones here, so I'll point those ones out. But in order for us to express a clean opinion on the financial statements, we are required to comply, the town, required to comply with full accrual basis, generally accepted accounting principles.
Would you not use that term, generally accepted accounting principles, at the bottom of page 3?
No, because the opinion that we're expressing is over the government-wide financial statements.
All right, I get it.
Which converts your internal statements to those ones. And I'll walk through that process.
I get it. Thank you.
Sure.
He tried, David. That's okay.
I've got more questions. Don't worry.
Okay.
That's okay.
On page 4, these financial statements are also required to include certain information inside your financials. One is a management discussion analysis, which is kind of like a report that summarizes the financial activity, maybe other capital projects or anything that the town wants to bring to the attention of the reader. That's inside these financials. And then because we also belong to the Berkshire County Retirement System, the Governmental Accounting Standards Board says that we have to report our proportionate share of that system within inside our financial statements, recognize our proportionate share of the liability. And then because we offer benefits to retirees in regards to like health insurance and life insurance, we're required to have an actuarial valuation done of that promised benefit that determines an estimated liability, and we report that liability inside your financial statements as well. Okay, and then there's other information which is supplementary, which we do audit, and we did express a clean opinion on. We had no issues. So the most important piece, clean opinion, no material weaknesses, no significant deficiencies, financial statements are in accordance with accounting principles. Now, page 5 goes for 8 pages, and this is the management discussion analysis. This summarizes all of the information that is inside the body of the financial statements, which we audit, which I'm going to cover anyways. So I'm going to bypass the page 5 series because I'm going to talk about it all anyways and go right into the numbers, which starts on your page 6. And Bill, if you have questions as you go throughout it, feel free to stop me at any time.
Thank you.
Okay, so page 6, a statement of net position. You can see at the very top, we had $8.5 million in cash. And what you're going to see new this year, which we did not have last year, was a category called investments, and that's $2.8 million. So at the tail end of fiscal 21, we transferred money up into Bartholomew Investments, and they're investing some money for us. So that got transferred up, I think it was actually towards the end of June, actually. So it just snuck in the year on us. So cash and investments, $11,395,000 in total. All your cash accounts were confirmed. The investment accounts were confirmed. We look at the bank accounts and all the reconciliations, and we didn't notice anything running through your town's bank accounts other than what is to run the operations of the town. So no issues with cash. Accounts receivables, I have a schedule on it. So when we get into the notes, I'll show you the detail of that. But the receivable, $683,000. It's real estate, personal property, motor vehicle, tax titles, and some receivables owed for the water and the sewer as well. So we didn't have any issues with the receivables. I will spend a minute chatting about the tax titles because that balance is up from the previous year. But when we get to that page, I'll talk about that. Bill, I should probably note that page 6 and page 7 are the government-wide financial statements. This is full accrual basis of accounting. So this is really what I'm putting my opinion on. Okay.
Is there a reason why you wouldn't put prior year down here?
There is no particular reason. We're not required to do it, and typically we have not done it. But there is no reason to not put the prior year. And some towns do put the prior years, and usually what happens is the balance sheet will end up going to 2 pages, and your income statement here, which is on page 7, the next, because it goes landscape on us, we would also have to add a second page for the 2020 year as well.
The comparative year information is also in the MD&A, the page 5 series.
Oh, yes, thanks, Joe. Yeah. So the MD&A is required to include that comparative information, but it's in a summarized format.
Right.
Okay, so capital assets, $32.9 million. That is cost of what we paid for the assets minus accumulated depreciation, wear and tear, allocating the cost over future accounting periods since the acquisition. For fiscal 2021, we had $2.4 million of additions, and we recorded $1.9 million of depreciation expense. And we have that detail in the notes, which you'll be able to see that. And we have the information, I'll just refer to it so you don't have to flip back and forth to kind of give you an idea of where we spent our money. So capital asset additions during the current year, we bought a Ford Explorer for about $36,000. We did some lighting upgrades for $13,000. Worked on that highway garage, was about 690,000. And we obviously worked on some bridges, which is about 1.7 million. And we had Park Street Pump Station we did some work on at about $8,400. We look at all the fixed asset additions, we trace the invoices, make sure they're recorded in the proper period, and make sure nothing got missed. And we didn't have to worry about making any adjustments in regards to that. And then again, all this stuff is detailed in the notes. It breaks it out so you can see it. Now, these deferred inflows and deferred outflows, I'll get to that in just a minute. Accounts payables, 530,000, nothing was unusual. We traced to the warrants at the end of the year. These amounts are paid just after the end of the fiscal year. We also look beyond the end of your fiscal year to make sure that we recorded all the payables and the receivables that we should have recorded, and we didn't have to make any adjustment to add anything else. So we had a good, clean cutoff, okay? Current portion of long-term debt, $1.3 million. So this is the principal amount that we're going to owe in the 2022 year. And then right below that, long-term debt net of current portion is 8.9 million. That's owed in years 2 through the end of the debt cycle. And we have details on those notes in the financial statements as well. We did pay $1.2 million in principal in fiscal 2021. So we met all of our debt payments, and we paid $330,000 in interest on those. So we didn't have any issues with meeting our debt service or anything like that. Now we have this line item called net pension liability. And that's the $464,000. That's our proportionate share of the Berkshire County retirement system. So we get information from the Berkshire County retirement system. And the Public Employee Retirement Administration Commission is also involved in doing the actuary analysis on that. We get our proportionate share relative to all the other towns that are in that. And then we record our proportionate share of the total unfunded liability of that pension system inside of our notes, inside of our financial statement. So we have notes on the whole system and our proportionate share of that system. But our proportionate share of that system at June 30, 21 was $464,000. Now, if you look up above, you see the deferred outflows of resources related to pensions and OPEB. And then you go down below that number, you see deferred inflows of resources related to pension and related to OPEB. These calculations that are done by actuaries are long-term calculations, and they look at a lot of different factors and discount rates and interest rates and assumptions that go into these calculations. Some of the pieces of the calculation, like trying to take a guess at what the investment income is going to do this year versus what it actually did, we can recognize that difference in the current year financial statements. Well, some of these calculations, because they go out so far and they discount them back to today's dollars, that the calculation is long-term. So one way that GASB has allowed us to smooth the impact of the change in these actuarial estimates is to temporarily park pieces of the calculation into these categories on your balance sheet called deferred inflows and deferred outflows. It's a silly, I know I'm being recorded here, but to me, the deferred inflows and the deferred outflows should have been left in the notes with one number brought to the face of the financial statements, because it's not really an asset and it's not really a liability as how we would know and understand an asset and liability. But in any event, the long-term portions of those liabilities for the change in the actuarial estimates get temporarily parked so that on page 7, when we have to report pension expense or OPEB expense, we're trying to make that hit to your income statement as smooth as possible. So that's probably the easiest way that I can explain that. So hopefully that's understood.
Typically also, David, the actuary, when they calculate, when make these calculations, they do it on a percentage of certainty.
Yep.
And they usually leave themselves a little leeway. You don't want to fund something at 100% certainty.
Right.
Because the funding level would be twice that of 50 or 60%.
Right.
So, that's a key component.
And that's a very good point, because also included in the notes, which you'll see, is there's required disclosures. We'll say that based on the actuary's calculation, that liability is this number. But if I was 1% wrong in either direction, this is what it would be. So it's an estimate. The most important thing for the town is this, that you make your payments on your health insurance for your retirees, which you are doing, and it's in the budget every year. So you're really on a pay-as-you-go basis, and that you make your contributions into the retirement system like you're required to do, which you do, and you're also on a really a pay-as-you-go basis there. So putting these onto the face of the financial statements is one of those generally accepted accounting principles, trying to do the best job possible to measure what your promised obligation is to your employees and measure and report that liability while those employees are working.
Can I ask a related question? The last item before total liabilities is net other post-employment benefits liability. And because it's a negative, it's an asset. Can you explain that?
Yep. And this was a change that I made in this year here that is going to be different from last year's financial statements. And after some research this year here, Joe and I concluded that we're allowed to offset the Opeb assets that we have set aside to meet the other post-employment benefit obligation. And if you just quickly skip ahead to page 12, okay? Here we have these fiduciary funds, that $3,834,000. So the town, over a period of 10 plus years at this point, has been putting assets aside to meet your other post-employment benefit obligations, your future retiree health insurances, okay? Back in the notes, we're just going to skip ahead just a couple more pages just so you can kind of see it. And we're going to go all the way to page 31. I hate to make you skip pages, but we go all the way to page 31, okay? And right in the center of that page 31, there's 3 columns, all right? The center column, planned fiduciary net position, that's that $3,834,000. And the town has that. It's an investment account. We confirm it. And the promised obligation to all of our town's employees determined by the actuary only turned out to be 3.7 million. So obviously we have more assets in the plan than what that potential estimated liability is as of that point. Putting that number into a net asset position as opposed to a net liability position. But now, back on the face of the balance sheet there on page 6, that's only one component of the calculation, right? Because we have the deferred inflows and we have the deferred outflows where we're parking timing differences of when we can recognize portions of this calculation into the town's expenses. So if you go up, you're going to see deferred outflows related to OPEB. That's an asset, or an asset equivalent, I guess, of 300,000. So that would be adding to the 114,000. So that would bring you north of 400,000. But then you go down below, deferred inflows of 733,000, kicking you back the other way. So the net of those 3 numbers, Bill, is the 302,000 above, the 114,000 asset, which is an asset, and then the 733,000, which is liability, ends up being net $787,000 liability. So when we say liability, that means that it's a reduction to that unrestricted net position. Mm-hmm. Okay. Now, if you were to look at your 2020 financial statements last year, you would see that the unrestricted net position was $3.8 million less. Mm-hmm. Okay. But after Joe and I did our research, we concluded that we were allowed to do that. And we also double checked it against what other towns are doing. So we're consistent with how other towns are doing it here in Berkshire County.
We're one of the few that actually fund for OPEB.
Well, there's a lot of towns that fund it, but you're one of the few that took it serious.
Yeah, they minimally fund it.
Yeah, as in, they adopted the Mass General Law, mm-hmm. and they went as far as they had to put $10,000 or $50,000 in there. But believe it or not, you know, some of the towns that I audit that really didn't take it as serious as you guys took it in the beginning, they're starting to look at it more importantly. And a lot of it, I don't want, to mine and Joe's horn, but it's just constantly bringing it up and talking about it and recognizing it. Even though it's an estimate, it's a legitimate liability of the town. You have a promised obligation to your retirees. And then obviously the ultimate goal would be to get, that to a point where it can actually function like a plan, just like the retirement plan.
Yeah, I don't want to beat this to death, but this negative net on other post-employment benefits, so 114,000 is an asset. Isn't there some way to reflect it as an asset and not as a liability if it's an asset? Or am I just?
They could put a
No.
footnote in possibly.
Well, here's the thing. It is reflected on the face of the statement. It's identifying as an asset because it's got it in brackets as an asset. If you're asking whether or not we should be
Yeah, but
including
it's
it up in the.
liabilities.
Yeah.
That's my problem. We don't need to spend time on this.
No,
It's just a minor,
Yeah, no, and I understand that.
it's just a weird
It is very,
treatment.
it's very strange.
But this is the accounting
But the net result, Bill, is that it's,
statewide.
The minuses are a plus.
Yeah.
there we go.
Okay, let's move on. I'm sorry, David. Please.
No,
Let's not,
that's quite all right.
Depending
No.
on the negatives are.
carry on.
Neither nor.
Arithmetic.
I do see your point, but most likely when we get the updated actuary calculation, that number next year could go the other direction based on the healthcare trend costs.
When the Department of Revenue looks at this, are they going to understand what you've done?
You know what the Department of Revenue looks at?
They don't look at that, I know that.
They look at pages 8 and 9.
Yeah, I know, that's
And the
true.
balance sheet that you're submitting is from pages 8 and 9.
Okay.
So,
Okay.
Go ahead, David.
no, even if it was recorded up in the assets, I don't think they would have any idea about it anyway.
Okay.
That's fine. Okay. Okay. So kind of moving on to page 7. This is the full accrual basis income statement, right? Now, full accrual basis, what this does, and I should have said this, is, well, let me start with the modified basis. In the modified basis, when you buy an asset, it's an expense, just like you budget it. When you pay your debt, it's an expense, just like the way you budget it. On a full accrual basis of accounting, when you buy an asset, it's capitalized on the balance sheet. Depreciation comes back into the income statement, okay? And when you incur your debt, the debt goes to the balance sheet, it's capitalized. And when you pay your debt, the payments go against the balance sheet, not as an expense. So that's the primary difference. So here is full accrual basis of accounting. So inside the expenses there, we have cash going out the door to run the operations of the town, plus we got depreciation expense. What it doesn't include is the payments on your debt, okay? And then also included in the expenses is the change in the accounting estimates for the OPEB and for the net pension liability, okay? So there's a lot of accounting nuances going on that if you were to print out the town's balance sheet out of your accounting system, you'd be like, oh, Dave, that doesn't even look like close to what we got. So, but anyways, that's what GAAP requires. So anyways, I'm not going to spend a whole lot of time on this other than to point out the $1.6 million surplus full accrual basis accounting wise. Let's go to page 8 and 9, which will make more sense. And this here looks at, this is your modified basis of accounting. This here would mirror what you would get out of the town's accounting system when they would print out your balance sheet. And this would mirror the balance sheet that's submitted to the Department of Revenue when they certify your free cash and record everything on your Schedule A report. So cash is the same, investments are the same, doesn't matter which statement that they're on, receivables are the same. The one thing that you're not going to see here is long-term fixed assets because those are expenses when we buy them. And you're not going to see long-term debt because they're expenses when we pay it. Okay. And you're not going to see the net pension liabilities and the OPEB liabilities because we treat all that as expense when we pay the health insurance bill and we pay our contributions to the retirement system. So when you were to look at down here below in the general fund, you can see we have fund balances of 6.9 million. We have monies that are tied up in with special town meeting articles for projects carried forward from the previous year, encumbrances, the use of free cash that we voted for fiscal 22. So those are restricted. And then everything falls into that unassigned fund balance. And which you don't see here, what's included inside the unassigned fund balance is the general fund free cash, okay, which is truly unrestricted net assets. And also the stabilization fund is included in there too. And the stabilization fund was about 2.1 million. The general fund unassigned fund balance, which includes your free cash, was 2.6 million. Okay. Now, free cash is part of that 2.6 million. It's not all, because there's other components that go into that. But anyway, so that's kind of what those numbers there mean. Then we have the CPA fund, and we have monies that are restricted for community preservations. Capital projects, we still have that one there because you're going to see on page 9, we had this significant capital activity. So that was still considered a major fund. And then we have all of our other non-major funds. And we have a schedule of what all the non-major funds are in the financial statements, but it's all your special revenue funds, your revolving funds, your gifts and donations funds, your federal and state grants that you receive to run your capital projects or pay for various greening activities that the town might get by getting awards from, various entities, primarily the state and stuff like that. And all of those assets are reported as restricted fund balance. We have to record those as restricted because they come with a very specific use. And if you don't, you have to use those monies on those particular uses. And, in the course of the audit, Joe and I look at all that stuff, and we didn't have anything come up in our tests. And then, Bill, at the very bottom on page 8, there's that reconciliation. So the town's got fund balance of 11 million. And then you can see down below in the right-hand column, bringing in your fixed assets, your OPEB, your net pension liabilities and all that stuff. And that's how that 32,741,000, that's how that number ties to the equity at the full accrual basis. That agrees to page 6 and 7. So that's how the two statements kind of link together. Okay, so I'll try and speed this up here. Page 9 is your revenues and expenses. Nothing unusual in your revenues. $12.6 million in total for the town as a whole. Real estate, personal property taxes, tax foreclosures. We did have a sale of a property there that went through the foreclosure process, so we got money out of that this year. Nothing unusual, none of the accounts, everything agrees to how the town had everything being accounted. But that's not me, is it?
It's mine. I'm sorry. I have to shut it off. Forgive me.
So we pull a lot of samples. We dig through a lot of the accounts, and the revenues were all reported in the right category, in the right fund. The expenses were fine, right period, right category, right fund. So we didn't have any issues with that. So the total expenditures, 13.2 million. Now we have a total deficit of 600,000, but the deficit really is being driven by the fact of the capital project fund. And that's because it's crossing fiscal years on us. So we got money in a previous year that we're now spending this year here. So you can see where we have $1.7 million of expenses. If you go down to the bottom, we had positive fund balance coming into the year of 1.7 million. And we still have positive fund balance left over going into fiscal 22. So, but nothing unusual in the expenses or anything like that. Page 10. This one here is the reconciliation of the modified basis of accounting to the full accrual basis of accounting, only looking at the current year. So you can see it's just going to be your current year fixed asset additions, your current year depreciation expense, your current year payments on the debt, and so on and so forth. So it just looks at the 1 year. Page 11 is your budget statement. And this reports your budgets that were passed and then the spending of that money on a budgetary basis, okay? And the spending on a budgetary basis is all of the money that you did spend connected with the fiscal 21 budget. And it's also accounting the carry forwards that you encumbered to the following year that you didn't get around to spending, maybe because an invoice came in late or something like that, but it's still spending it, and you are going to spend it against the fiscal 21 budget. It's a timing issue.
So that's how you get to actual budgetary basis?
Yes, and yes, that's exactly right. So it factors in those two components. And then, so that way there, when you're looking at the variance, especially down into the expense side, you're looking at to what's being returned the free cash. Okay. And now, there's one thing I know you're gonna know, so I'll point it out. Is down in the debt service, you see the interest and fiscal charges is a negative 96,000. We know Massachusetts does not allow deficit spending. So, but what happened was, and the reason we didn't have to make an issue of it or bring a comment of it to the audit is because there was a vote that was missed in the fiscal 21 annual town meeting, but it was caught by the town, and there was a vote in the fiscal 22 Article 36 to capture that. And what that represents, there's sewer debt that we have. And there's a transfer that comes out of the sewer fund, which is a special revenue fund, to cover the debt payment on that one particular note. And that one there was missed in fiscal 21, but the town caught it and corrected it in fiscal 22. So no impact on the taxation or anything like that. So the town properly fixed it. And what you will see is you'll see the transfer that should have took place in fiscal 21. You're going to see it in fiscal 22 to correct the 21 issue. And then you also see the transfer in fiscal 22 to pay for the 22 debt. So the
It'd be a double amount in essence almost.
net effect would be the same, though, in the
The net
end.
is the same.
But anyways, the town fixed it. So we didn't have, and Joe and I didn't have any issues with it. Okay, holy mackerel. Okay, so moving on, page 12, those are the Opep assets. Those are invested in PRIM, a public
Prim.
PRIM. Yeah.
Pension retirement investment trust.
Yeah, specifically, they're overseen by state legislation and the state treasurers and all that stuff. So that's what that number is. That's for the Opep assets. And then,
Before you go on, you, Michael, this is the picture as, June 30, 2021, with rather exceptional investment.
oh, yeah, I was going to bring that up. That's exactly right. Because, yeah.
Do you know where we are today as far as investment earnings are concerned for the last 9 months? It's almost 9 months.
Yeah, I don't have that right readily
Yeah.
a whole lot.
It'd be interesting to know that, because what happened in FY '22 was exceptional. I mean, that was
Yeah, FY '21.
FY '21.
Yeah.
Right.
I mean,
No, yeah,
we've never had investment earnings like that.
Yeah, 21 was a
Before.
very good year.
Yeah, and this last 9 months have been
You won't have it, to say the least.
volatile, to say the least.
Exactly.
As long as we're on this subject.
Yes.
Can I ask a question on page 27 regarding pensions? 27 and 28.
Yep.
At the bottom of page 27, under actuarial assumptions, the investment rate of return is 7%. That's too high.
That is what,
I know we didn't set it, but
oh, yeah.
I'm just saying that's too high.
It is too high.
It should be 5% or maybe 4%.
It was 6%
Yeah,
a couple of years ago, and we complained about it.
This is wishful thinking, and it's wrong to it's how pensions get in trouble. Pension funds get in trouble. They make outlandish assumptions about future returns. And in order to meet those returns, they do things like what's on page 28, which is to put 38.8% of the assets in highly illiquid, risky securities.
Right.
Let me just ask one question. Is that 7% coming from the fund itself? The state fund, they're giving us that number? Is that where that comes from?
The 7% is the rate that's being used by PIRAC when they're doing all their calculations.
Yeah.
And that rate is also applied to the liability side of the calculation as well as to the investment growth.
I mean, I've seen worse. I've seen 8% in other statements. I think 7 is too high, and I realize it's not our number.
Right.
But then you look at this asset allocation.
Who's our representative to the county?
The county pension program.
No, who is our town representative?
Do we have one?
Erica, is it you that's on the county, right?
We do have one, don't we? We have a representative to the county.
That represents PERAC? to Perrick?
Oh, but this is the county retirement system?
Berkshire County.
This is Berkshire County,
Right.
and the Berkshire County funds are invested with
Oh,
So if you want to carry a message to the county retirement system, my question is, we've had a town representative to that county, the last part of Berkshire County that exists. Perhaps this is a message that we should
Relay.
pass on to our representative. I believe we have one.
They have a board, I'm not sure.
Yeah, do we have a representative on the board?
no,
Was it Karen, maybe?
Oh, Karen, I think might have been on the board.
Yeah.
I mean, if it's.
So we don't have anyone on
Does
that
every
board
town
anymore?
have a representative? That's a
No.
lot of
No,
people.
there's only like, I think there's like 3 to 6 board members
right,
overseeing.
So
it.
we have no one on that board anymore, is that it?
right, I don't
Right.
think so. I mean,
Okay.
we all listened in on the last meeting, but we weren't part of the voting members because the last one was the vote about what they're doing with the rates this year, which they went up 8.1, but then gave a premium holiday. So there was no change in insurance, but of course then they built in a 8.1 into the following year.
Yeah.
So, but yeah, we don't, as of right now, we don't. We're not one of the voting members.
Well, it shouldn't-
Not every community has one.
Yeah.
It shouldn't prevent us from making a
Oh,
recommendation.
no, we could, right, we could still make that.
Yeah.
Yeah.
The, OPEB actuary also uses those assumed returns for its calculations. And I think we ought to be asking the actuary whether or not 7% is a reasonable number to be using historically.
Yeah.
Right.
I mean, the last couple of years, it was higher, but
Although maybe.
everybody I know in the investment world is predicting low to
Yes.
middle, single-digit
Yeah.
appreciation this year.
This year here.
And they've been ratcheted down as
Now,
look out towards
now I don't know, this might matter though. I agree with you on the 7%. It does seem a little high. But I don't know if this matters at all or not. The numbers our proportionate share of the net pension liability that we include in here is based off of December 31, 2020. Okay, so it's behind because they're on a calendar year, we're on a
Right.
fiscal year, so we
Okay.
got that 6-month gap.
Yeah,
So I would think for the 2000, when they go to do this for December 31, 2021, I mean, Mark was really good in 21. So
Yeah.
you would think that they wouldn't go, up with it. But I don't know. I guess the questions for
I
the
just think
pension system.
it's risky
Yeah.
to set that figure too high.
Well,
I also think the asset allocation is too risky.
if we're going to ask those questions, or we want, the town to ask those questions of the Berkshire County retirement system, then we ought to put together something that poses the questions and suggests why we have asked those questions.
Let's leave it this way. We should find out who's on the board, okay, of this. And then we need to go in writing to that, one of those individuals that we know. There's got to be somebody we know.
We can-
From one of the towns.
We can submit it, just because we don't
We
have
should
a
submit
board,
it.
we just don't have a.
Yeah, but we-
Yeah, we should, it's a valid
Submit it,
question.
we don't need to.
but the writing is what I'm talking about.
Yeah.
Yeah,
Someone needs to sit down, Bill, since you're the one who brought this up,
Yeah,
you have the experience in this world.
I could write it up.
be helpful.
And I think that's right. It should be written down.
It's something, what is this long-term expected real return? That would be the nominal versus inflation?
What page is that on?
I'm not sure
What
where
page
those
are you on
numbers
there?
come from.
The
28.
28.
I don't know where those come from.
Oh, yeah.
Yeah, the long-term expected real rate of return.
And to me, some of those numbers are a little squirrely. Core fixed income at 1.49 and US equity at 1.48.
Real return, meaning the nominal minus inflation.
Yeah.
That's
Yeah, okay.
economic term.
Yeah, unfortunately, I'm not
No, I don't think this is your problem or something we've imposed on ourselves and suddenly we have to correct. It's this board or commission that we need to talk to about it.
We need to submit, we'll submit something.
What they say about assumptions, assume.
What page are we on now?
I know, right? Going backwards. Let's move on.
Sorry, I jumped ahead,
No,
but
that's quite all right. So that was, we were back on page 13, which was the change in the assets inside the pension system. Yeah, it was very good. Mark was really good. So, or not the pension system. I didn't mean to say that. Opeb. The assets held in Opeb. Yeah, or the pension plan definitely would be defunct. If that was the case. Okay. On page 14 starts the notes to the financial statements. And these describe all of our accounting policies that we follow, and everything that we did last year is the exact same thing that we did this year here, so nothing new. Well, there is some new stuff that had been added in regards to the investments. So I'm not going to go over all the notes. I'm just going to go over the ones that had changed. So if we keep moving forward and go over to page 19. All the other notes before that talk about, how we recognize an asset in the financial statements and how we recognize our revenues and all that stuff. Same disclosures as the previous year. And at the bottom there, it says detailed notes on all funds, note 3. And this is here where we expanded out your investment disclosures because GAAP requires that when we have investments at fair value, that we're required to include specific disclosures, required disclosures. And that's on page 19 and 20. So it gets into, deposits and investments, credit risk. The investment policy that I have there is just in generic with the fact that we are required to follow Mass General Law. And one of our recommendations that we made this year here is to actually put a formal investment policy into place because we are putting assets out into the market that are subject to the fluctuations of the market. So we got to be careful or only invest in what the board allows us to invest in.
in your letter, you or somebody suggests that the select board be tasked with this.
Yeah.
Creating an investment policy?
Yeah, I think Michael started the process, and I assume you'll be bringing it forward to. Erica started the process.
Right.
I was going to say, I don't think the select board is competent to produce an investment.
Oh, finance committee is probably where I would keep it. I didn't mean to say it. If I said select.
No, you didn't.
Okay.
Somebody, there's a reference to
Yeah.
the matter being referred to the select board. I don't think it should be referred to the.
Okay, and if.
Maybe it can be finalized by the select board.
Yeah.
This is the body that should be doing that.
Yeah, I agree with that. And Eric, I don't know how far you've gotten with it, but we also had 2 other towns this year here adopt investment policies too. And they put money, we did Bartholomew Investments, right, Joe? Okay, yeah, we did Bartholomew Investments, and a couple other towns also did Bartholomew Investments. So, and we had a couple towns adopt the investments over Opeb and just general investments. So if you like, I can just strip the name out and just send you that.
That would be great. I did get copies from some other towns, but
Okay.
more is better.
Did you get Lennox?
I might have
Yeah,
one.
this was right here, that I was looking at,
Yeah.
the town should document its policy on investing, including investment returns, risk parameters, strategies, et cetera, and the action. An investment policy would be brought forward to the selectmen, and that should include the finance committee also,
Yeah, I agree with Bill, having the finance committee be the leg of the work and
the
get
management letter.
Who's Bartholomew?
where are they located?
They're an investment advisor.
Yeah.
They are an investment advisor. I don't have
Are they
the background with me.
Weren't they in Worcester at one time?
I'm not
They're
sure
good?
where.
Yeah.
I have a ton of.
Specialize in
Yeah.
municipal.
Town of Williamstown uses them.
Williamstown, Lennox uses
There
them.
you go.
Municipal.
All the AAA rated towns. Erica, if you would like, I'm happy to work with you
That would be great.
on putting that together. Subject to approval by.
Bill,
Absolutely.
While you're doing the letter on the risks of investment risk.
this here, Bill, this is
Okay.
just a printout of
So
what we got.
let's talk
But this is
sometime
the
next week
Bartholomew
about-
investments, and this is as of June 30. And there is
Perfect.
this number here, which ties to.
Let's have one conversation, please.
Okay, sorry, Jay. And then this shows you where what assets the town put in place. And Bartholomew, by the way, I have a lot of other communities that use investment. And Bartholomew is the only one that actually does this summary statement.
That's good.
And then behind it is the actual statement, which details the assets and what you have invested.
And you get this every month or every
Right,
quarter?
every month.
Yeah.
We've been involved with them for a very long time.
Good.
Yeah.
So, by having this in here from Bartholomew made it very easy for me to do my disclosures.
Good.
Okay. All right. So that's what all this investment fair value, level 1, level 2, level 3 stuff is. And then if you go over to page 21, there's where you can see where it's a broad summary. So it's not the individual assets, but it's the category where the assets are. And you see we have cash, and it's called a bank deposit sweep program. And it's actually a pretty nice program because what it does is behind the scenes is it sweeps cash to other banking institutions that carry FDIC insurance. And we know that if you have money tied up into an account, if it's not a savings account, you only get the FDIC. If it's a Massachusetts savings account, you get FDIC and DIF, insuring 100% of the balance. Well, you put any assets out on the market, they're unsecured, they're not insured because they're subject to the whims of the market going up and down. But we do have money tied up into the cash, and that cash balance is insured under FDIC because behind the scenes, it's swept to about 6 or 7 different banks. And some of them are pretty large banks. So, but anyways, I thought that was pretty neat when I saw that. And all of that's detailed in that investment statement. So that's the investments. And then we know that we have the OPEB is tied up into the prim. Okay. All right, I'll start trying to speed this up. Page 22, the receivables at the top. These are the receivables that are outstanding as of the end of the year. Real estate, personal property, motor vehicle excise tax receivables. We have a schedule all the way in the back, so you're going to be able to see the collection of those receivables, how much we collected versus the commitments that actually got placed. And you're going to see that we have a very high percentage of collection on our real estate taxes, on our personal property taxes, and even the motor vehicle excise, it is still pretty good. It's never as high as real estate and personal property, but we still have pretty good collections. But anyways, we'll see that when we get to that report. And then the other one thing I just wanted to add was about the tax liens. It was $240,000. And Joe and I noticed that it went up. It didn't go down, which was fine, I guess, if it goes up. And I know that we got switch in management.
I've seen that list. There's about 30
Yeah, okay.
properties on there.
Yeah, and then, anyways, one of them is still that DeSisto school.
Yes,
Which makes up about, I want to say it's $104,000 is DeSisto of that 240,000. It's been on our list for many, many years.
there's a building across from the DeSisto
Yeah.
complex that's vacant that is one of those tax liens. That is one of those, that's at least one. They own more than one. And it's not part of Sheehan's involvement at all.
Well,
I don't know if we even know who owns that anymore. right?
It's in tax lien. It's being acted on. And I know this through the Housing Trust
Okay.
Committee.
All right.
I have a list of all these.
okay, good. And that was my only comment, just to
just
make
don't
sure
have
that
it
they're
with me
actively
today.
monitored, that's all. Okay, and then the due from other governments there, the 157,000, that's capital grant or operating grant activity that we incurred And we received the money after the end of the year, so we had a right to record those receivables, so we don't
Like
have.
chapter 90 monies and stuff like
Yeah,
that.
what piece of it was chapter 90?
Yeah.
And other ones like a strap grant or something like that?
Right.
Okay. Note D there, you can just see the detail of the fixed assets and all that stuff. So everything was fine there. Page 23, you can see the debt. The fire truck, you know, it looks like we borrowed new debt and then paid off old debt, but it's actually, it's actually short-term obligations kind of that was used to finance the cost of that truck over an uninterrupted period of time, multiple fiscal years. And unfortunately, those serial notes are looked at individually, but we can look at them just as one. So out of the $150,000, you know, we paid off that serial note, but it got dropped to 100,000. So it was really only a $50,000 payment. But in any event, we made all the debt payments that we were required to. There's no new long-term debt at all. So, and then down below just kind of amortizes out when the principal is due and the interest that comes off the amortization schedules. So you can get an idea of how much debt service we're paying. And then page 24, at the very bottom, just points out what I had mentioned earlier about offsetting the Opeb assets that are inside that investment account against the liability, which we're allowed to do. So it just explains that. And then note H on page 25 just kind of details out the fund balances, which agree to the totals on the balance sheets. And it just drops it into more details, you know, what's reserved for continuing appropriations, what's tied up in stabilization funds, what's reserved for continuance, carry forwards and reserved for encumbrances and stuff like that. And what's tied up with grants and stuff like that. So all that stuff is fine. And then note 4, at the very top, we're not aware of the town being sued or anything like that, or having any material negative financial impact if there are anything going on. We didn't see anything. We make confirmation with the town's attorneys, and they didn't make mention of anything to us. We didn't notice anything running through the general ledger in the form of legal payments. We did see money come in from Pioneer and Noble, Joe, and that was to settle an issue that happened with the fire department with some supplies. So we saw that come through. That was about 65,000. But anyways, we're required to make just a blanket disclosure, you know, but we're not aware of anything that can affect the town. Then note C about the Berkshire County retirement system goes on for many pages. And starting on page 30, it details the exact same type of stuff that goes on about the other post-employment benefit. You know, and the actuaries calculations and stuff like that. And then page 33, 34, and 35, we're required to disclose up to 10 years of information about the OPEB and the net pension liability. We don't have 10 years yet because the accounting, that requirement when it came through, we haven't hit the 10-year marker, but we'll eventually get there. And this will eventually go on to 2 pages, or Joe and I will kick it sideways. So. I just noticed that. I got a dash in front of that, doesn't belong there, Joe. Okay, and then page 37 and 38 is just details of your special revenue funds and your trust funds. Just shows you the assets that you have and the revenues and expenses that they came in. Joe and I didn't have any issues with any of that stuff. And all this stuff ties right to your income statements, right to the very front of the balance sheet. And then on page 37, I think this is always good to report in the town. This is your taxes. So the very top one is your real estate taxes. And you can see we had a tax commitment for the 2021 year of 8.7 million.
What page are you on?
Oh, I'm sorry, page 39. I meant to say
Go
39.
back to 37 just for a moment.
37 and 38.
37. Just the fund balances in water fund, sewer fund, and other sources of revenue, such as state and federal grants, are now up to, let's see, 2.5, 2.6,
Yeah.
or is it 2.3?
Yeah, 2.3.
2.3 is the number.
Well, yeah, 2.3 million.
2.3.
Yeah.
So is this a number that has been going up? I mean, I don't recall seeing water and sewer available surplus that is as high as this. And it just seems extraordinarily high.
Yeah.
And it raises the question.
All of your accounts have been built.
No, I understand that, but it also raises the question about, because again, it's call it taxpayer, it's ratepayer money.
Yeah.
And how are we, the issue is, how are we spending this? Are we, again, creating a bank account here, or are we spending money for water and sewer purposes?
It's historically been spent for water and sewer purposes.
But it's never.
Offsets those projects.
It's never been this high.
I
Like,
think
I
we had a
keep-
rate increase 2 years ago.
Yeah, there's something,
What they should be doing is setting aside money for the next major repairs and so on like that.
well,
Because I get tired of the town funding that
yeah,
kind of
the
crap.
policy, and Neil, I just bring it to everyone's attention because the policy decision is not ours. Policy decision is the select board and with recommendations from the town administrator. But it's just, it seems to me, too much money in an account not being used.
And I think you're
Yeah.
actually going to see that grow more, specifically sewer, because they were paying about 96,000 and the water, the pump station one, which is going to replace that one, is only 48. They're going to be taking in about 50,000 more annually into that account also. So, yeah,
Are they using this toward the pump station there for the 18 houses on Park Street?
That's,
yeah, that's
Park
being
Street is the
funded
one.
through the sewer reserve fund. But we had a debt falling off, which was the one that was referred to in here that we had to make a double payment for, the 96.
Right.
That debt fell off, we took on new debt, but the debt we took on was only half of it. So if anything, they're gonna have an additional surplus next year in sewer. So above and beyond what they've been taking in. So I guess it's re-looking at what it is. So right now, we are going out with an asset management survey and an I&I survey on the water and sewer systems. Those are gonna generate major repairs that are gonna be needed, from manhole replacement to lines that are gonna need to be replaced. So there's about to be some significant money that's gonna need to be spent in those areas. And, yeah,
And historically, if I'm not mistaken, those allocations of water and sewer surplus funds are part of a warrant. They go as part of a warrant.
Treated as special appropriations, but they've been growing faster, Jay,
No, I
than the
understand.
expenditures from them.
and I guess we haven't made a determination of what you want to carry in that account as, I know before when I served on the Hoosick Water, we had the emergency management and repair fund, and the EMR fund that was referred to as a separate water district.
Right.
And basically, we're supposed to have a percentage in there in case of any major, but once again, I don't know if we've established something. So right now, it's just sort of building. And I'm not sure if there is a concrete plan on how it was used or why the rates changed or anything else. So
All right.
I mean, yeah,
future discussion, I guess,
well,
as we continue along with investments and.
I mean, the fund balances in the water and sewer, yeah, they're definitely up when you compare them to the history of Stockbridge. There is no doubt about that. But like, the thing that can really drive these fund balances down is the cost of repairs. And even in fiscal '21, you had $300,000 of fixed asset costs. Not even to mention that this fund is even short $100,000 because you didn't make that transfer.
David, notwithstanding
Yeah,
the increase in the cost of repairs, this fund balance is up to an historic high.
Okay.
I mean, if you go back and take a look at your audit history, you've been doing this town for how long?
Oh, yeah, number of years.
Go back and take a look.
Well, yeah, I mean, Joe and I can put that together. We can put that analysis together.
It'd actually
Just
be
look at the fund
interesting to
balance
see.
over the last 10 years.
Yeah.
It'll take us, 15 minutes to put it together?
But I guess more is the future plan of what
Yeah.
we know we're generating. We know based on, we can come up with an estimate of what we're generating right now. And right, it has grown. We are generating more revenue. We're building that reserve. But the question is more is to what purpose? That's what I'm.
Yes, that's
To
the
what
question.
purpose Are we building that reserve?
Yeah, and if it's, certainly if it's anticipated that the system is going to require more extensive repairs to it over the course of the next 3 to 4 years, that's
Right.
fine. That's part of the capital plan.
Right.
And I guess that's what we really would all like to see.
I
We
don't,
don't have one right now. We're
Yeah, no,
doing phase
I hear you.
3 and 4 over the next year.
Right.
They were talking about putting it off, but our
Yeah.
concern was not to put it off. So we're actually going to use ARPA funds to fund stage 3 and 4, get those done so we can get those lined up for 2 reasons. One is we have a plan. 2 is to get these projects shovel ready in case additional infrastructure or other available funds become available.
I don't even want to get into it now, but I mean, you've had an initial estimate for replacement of the Clark Street pump station, and then you've had a review which is substantially greater, you know, than the initial estimate.
About 400,000.
And basically, some of those surplus monies could end up to offset that
Could, it's gonna be
situation.
very interesting in the next couple of years. So it went out.
Can't even get into that now.
760 came back as.
We don't have the-
9.
Right,
A little bit.
I didn't mean to cut you off.
No, that's
I'm sorry,
okay.
Bill.
interesting.
No,
Go ahead, David. Yeah,
Well, question, you used to do a full absorption accounting by the kind of departments that are kind of businesses, like water, sewer and so on a full absorption basis. Do you still have that in here? I remember about 5 or 7 years ago, I remember reading it. You know, where the water sewer is not on a cash basis, but looking at depreciation, things like that as well, kind of full absorption accounting. Full accounting.
No, I mean, as far as I'm
It
aware.
used to be there.
Yeah.
I
I mean,
didn't see it looking.
yeah, I mean, in other towns that we have, water and sewer is treated as an enterprise fund,
yeah.
which allows you to bring the fixed assets and the long-term debt and allow you to actually look at the operations of the whole thing. From
Because when we had it, it showed that
I'm not
on
aware
that
that-
basis, it was running a negative. Just on a cash flow basis, it was a positive. And I won't say anymore.
Yeah, I don't recall that. I always recall water and sewer being on special revenue funds. Like,
No, it was just, you actually did the calculations as if they were.
okay, yeah. I don't know. Maybe Vince used to do it or something like that?
It was in the auditor's report. But my early years on the finance committee, it was there.
That's a long
I
time.
remember, well, yes.
All right, let's move on, David.
And then the last page I'll cover is page 39. So I just want to point out, the town does a very good job in regards to collecting its taxes. So off of the 2021 year, we collected 97.5% of the commitment. And you can see the uncollected real estate taxes, you know, are only go back to 18 and they're fairly small amounts. Personal property taxes is a 99% collection rate. And then motor vehicle tax on the 2021 year is an 82% collection rate. But you can see by the time 2022 is going to roll around, that the collection rate will be up in the high 90s. So town does a very good job in collecting this
Are
stuff.
those rates here, or did you just make notes of them?
Oh, no,
missing them.
so the commitments is what I was, no, the rates, I did not.
The collection rates?
Yeah, I just divided the
Yeah, okay.
collection by the commitment.
I thought I was missing something.
Yeah, I didn't see it either.
So I think that's it. We had one management letter comment,
Nice clean letter.
yeah, to just adopt
Remarkably clean.
that. And we know we had last
Excellent.
finding, but Joe and I and the rest of the audit department, audit team, when we went in and we audited your procurement. So everything was done fine. We were able to issue a clean opinion, and we noted that.
It's a testament to good
Yeah.
management.
Good man.
Thank you.
Well, job well done.
You gotta give credit also, this was a year that we went, a lot of people were involved.
Yeah.
So Karen, Ray,
Well,
Erica.
there are only three,
Terry,
there are only three of you sitting here, so.
And Terry too, spent 2 months as our accountant. So,
right.
in a year with that much transition, I compliment everybody.
You're-
And especially these two. And then-
False modesty will get you nowhere.
It's a great team.
Yeah.
Anything else for David and Joe at this point?
Thank you very much. I have to depart.
Okay, well, we're going to take up the minutes and a few other.
Okay, I have to.
We need to vote to accept the,
Yeah, 'cause
Yeah,
I got to
we
get
do.
these finalized and submitted.
I'll move that we accept the audit report as submitted.
Second?
second.
Okay, hang on. Any discussion? There being none, all in favor?
Aye.
Anybody opposed? Okay. How's that?
Yeah, it was very good.
Thank you.
Thank you.
Thank you.
Thanks, Steve.
Are you gonna work with her on that part and he's gonna
Yeah.
submit his letter, right?
He's on his own.
See you later.
Okay.
Come back when you stay longer.
Perfect, thank you.
What I can do, Bill,
See ya.
we have copies of the actuary valuation report, and we have information from Berkshire County Retirement System. You can actually take a look at the whole report.
I'd love to see it.
So do you have a card or
Yes.
anything like that, and I can email it to you? We have all that stuff, right, Bill?
Oh, yeah.
Okay.
Yeah.
All right.
Okay, I want, we can excuse yourself. We're going to
Thank
talk
you.
about a series of minutes that have nothing to do with the audit.
You know,
Thank you.
Thank you.
if you need, ask any questions about it, or any questions about the
Let me have
audit,
your card, Dave. Thank you.
Thank you. Feel free to reach out.
Thank you.
Thanks, David.
I know you gave me the letter that me and Eric had to send.
Thank you, guys.
Yeah, that,
Thanks.
This one.
yeah.
All right. Because I know papers were gonna move. Sure, I have to.
Yeah, if I could get that, if you could sign that.
Oh, you need Cheryl?
And I need Cheryl. I need you and Cheryl to sign it.
Yep.
Yeah.
I'll go get it signed right now while they take care of the minutes.
I'm going to run through the minutes for a couple of points, so
All right. Well, it's good to see everybody.
thank you.
Thank you for coming in. Nice to meet you.
Thank you very much. Thanks again.
It's all the trees we burned down.
You know,
Yeah, that's a lot of paper.
Okay, everybody, I circulated a set of minutes from our last budget meeting. Those minutes, basically, I did get comments back from Jim. A lot of those, your comments generally were grammatical in nature, and we can add those points. Namely, clarifying the police request of 118,000 from salary to cost, because we get into the cost detail. We talk about categorizing all of the requests from highway. I think it's 607,000 is the total. We can add that. And the Park Street pump station, that's an issue, because the indication went from 700,000 to $1.1 million. So, I mean, the water and sewer surplus, we got to get money for that somewhere. We've got to replace that. But I can interject those in the document. Are there any other comments on those minutes?
Can I ask an annoying question?
Yeah.
Why is it all caps?
It's easier that way
Yeah.
for me.
Yeah, it
Okay.
is really. It's
Yeah.
easier to.
So I don't have to do smaller and
Right.
bigger and,
Okay.
yeah. I mean.
I think it's a
Trust me,
wise
Bill, it takes a
decision
lot of
myself.
time to do this. Okay.
You
You
do
know
great
that.
minutes.
All right.
I just struck.
Yeah, I think
the
it's
all
better
caps.
that way.
Okay.
Okay, minutes to approve. A motion, please.
I have one question
Go
or
ahead.
comment. I read those minutes, and when I looked at the fire department requests.
Yeah.
I almost had a heart attack. Sorry about that, folks, but yikes. Are those things You cannot tell me today that those things are all, those amounts of money and requests are already going to be appropriated.
Let me, those, if you read further on my comments, that proposal was sent back to Michael to
Subject-
rework.
subject to
Okay.
more input.
Basically, the key issue there, and not to belabor this thing, is we have an engine in a 2018 fire engine. The 2018 fire engine has 2,500 miles on it. It's barely used. The proposal that the chief made was to replace two engines, older Pierce Arrow engines, with a brand new engine. The comments were made at the meeting, why can't we use that 2018 engine as a primary response vehicle? Okay. Well, it's not fully equipped and so forth and so on, and it'll cost money to equip it. Well, it ain't gonna cost $1 million to equip it,
Right.
okay? So there was no action on that proposal.
Okay.
It's back in the drawing boards.
Okay.
Okay, and I just noticed, something that I wanted to mention to Michael, that there was 100,000 that retires the debt of probably the 2018 engine, so that there is no major capital debt. And, the question is, why would we spend $1 million on a fire engine and we have an engine 2018 that we're not going to use at all? That doesn't make any sense, okay? So that we need work on that.
His concern is, the fire chief's concern is that it's not as capable as the new machine would be. I'm just saying.
That's true.
I'm not arguing.
But basically, there is a thing called mutual aid,
Yeah.
that the capability is enhanced through Lennox, Lee, Great Barrington, and so forth. That, I mean, this is,
Yeah, I get
that's a swash over.
The other striking thing from that report, the fire department's report, was last year there was 264 fire department calls,
Yes.
one major fire.
One major fire.
One.
I think,
Out of
what was there in
264?
Stockbridge, a total of 5, or what was that? I mean, the number of
Yeah.
actual fires in Stockbridge was pretty low,
Yeah.
which we're glad of.
Most of them were, my smoke detector is beeping at me.
Yeah.
Come, tell me what's wrong.
The other thing that this committee should be aware of is and obviously there is no action, that the chief's contract comes up July 1st. Okay?
Did you end the,
Well, it doesn't make any difference.
I just was looking at the screen, that's
Yeah,
all.
we're still on, I think.
Give them away.
But that's got to be dealt with. So no action at this point, okay?
I mean, there were other items, I don't want to get into it, on there as well, that I just about.
We have to have something that's palatable.
Okay.
I mean, you're talking about there was 200 and some odd thousand in equipment and
Yeah.
$1 million engine. I don't have all
Yeah,
the figures.
I called it wishes and dreams. What are you smoking?
Here's-
And the other thing has to do with, I assume that when he goes out to whatever it is, if there were some fire, as you all say, one, he has the appropriate equipment available for his use to put the fire out. Or
Mutual aid comes in.
what's coming down the line in time to come, as I understand it, the volunteers and people who are full-time, et cetera, and these are small, we're all small towns.
It's going to be called regionalization.
This is something that has to be addressed by the county.
Yes.
Okay. And unfortunately, this county, Berkshire County, really retrenched from its involvement on a community basis. Is this off or still on?
I don't know. Did you end your meeting?
We didn't.
Sort of, but I asked it
Formally, we voted on the audit. We didn't vote on.
Yeah, we didn't vote on the minutes. We have,
No, it looks like you're still in the meeting.
what?
It looks like you're still in.
Yeah.
Oh,
I don't think anybody else.
all right, I'll zipper it and
We have a,
No, those are legitimate questions to discuss.
I looked and I was like, whoa.
the minutes, the minutes that we're talking about are the finance committee
Finance
last
committee.
minutes. Can we get a motion to
Yes.
approve those?
So I
Second.
move the amended minutes.
As adjusted.
Yeah, as amended.
Yep. And second,
Here.
any discussion? All in favor?
Aye.
I abstain because I wasn't.
Okay, 1, 2, 3, 4,
Even
4
though I wasn't
yes.
at that meeting.
Well, you can't
One,
vote either.
we have a majority.
Not against, abstain because I just.
No, I know, but if you weren't there, Diane, I don't
need
think you
to
can
abstain.
vote.
I wasn't there either.
So we don't have a quorum.
Well, if you.
I read it.
I'll vote that I approve, but it just.
But you weren't there.
You weren't
I wasn't there.
Yeah, no.
No, I wasn't
Did
either.
Defer till the next meeting.
I wasn't either,
Okay,
Defer it.
but I read it.
deferred,
Yeah.
majority, for majority. I have one other bit of information for
Actually, we
everybody.
have a majority of those people who were present.
Here's some information. I spoke to Sharon Harrison of the school, of
Oh, yes.
the school business manager.
Yes.
In 2022, we will have an enrollment of the whole district of 1,188 students.
Can you send those figures in an email, please?
Yeah.
Yeah.
And basically, the other issue that she told me that there are an increase of 7 Stockbridge students from last year, and we have of that 1,200, 118 total students in Stockbridge. And school choice, total system, school choice, 271.
What does that mean?
Wow.
That means that they pay 5,000 a head,
Come in.
and they come from different communities other than West Stockbridge, Lenox, and West Stockbridge, Stockbridge, and Great Barrington.
Do we know how many opt out
What's the cost
and
of,
go to Lennox?
No, I'm talking about choice, this is choice
We
in.
can get that number.
well, I.
The choice out number too.
Questions for an update, one of which was, what is the total, what's the cost per student to educate our students?
Well, it's very simple. You take 118,
No. I'm talking in the Berkshire Regional School District, then we factor in what
Yeah.
our town. But more importantly, when you talk school choice, I believe our town, the school district gets, I believe it's still at $5,000. Whatever that figure is.
Yeah, it's
it hasn't
$5,000
changed.
is
It
the
hasn't
figure.
changed since almost when I was born.
which is
But-
nothing.
Yeah, exactly.
Yeah.
So that's a thing that we need to discuss. I put those questions out. I'm still looking for the answer. And I do want those because I want to raise that at the appropriate time in the appropriate meeting. And I can't do it without those answers.
Well, you talk about the consultant, so to speak. Is that what you-
I'm talking about the questions that I submitted, not for discussion, but I submitted them so the rest of the committee
Yeah.
would know that those answers have been submitted. I've submitted a second request and I added an additional one, and that one was, as I understand it, the school board passed a motion to hire, I believe it's called a public relations person. And I believe the budget for that was 50,000 or more. And I'd like to hear some justification for a school district that's going down, why we need a public relations department for the school. That's all. I just want a justification for that.
Well, it seems to me also
I think it's out of control.
that we have representatives from this town. I don't know who they are on the school board, and they should be reporting some way back to the select board or to the town. I don't know if they report to the town.
No, they
what goes on at the
They
meetings,
report to the school district. School
the school.
districts.
but they should advise the town as to what's going on.
Well, Jay, that's why I wrote the questions. Several years ago, I got the answers.
Right.
I
just
just got
got-
questions, so I'm just waiting for a response.
No, and I'm not being critical of you. Please understand. I know you're working on getting those. But that's why I would like to defer the school discussion until we have those numbers, because when he puts the numbers out, he can send those to everybody because it's not for discussion. And at that point, when we come into a meeting, we can all be prepared to discuss the ramifications of those numbers.
We need,
That's my personal opinion.
Right.
And I'm going to.
Otherwise, you're spinning your.
we need to talk about the next meeting, budget meeting.
Yep.
You know, and get back to the committee, because we've got a lot to talk
A lot to
about.
do and time seems to be getting short.
Yeah.
Several years ago, I did a calculation of the cost per Stockbridge student versus what we paid, and it was well over 20,000. This is several years ago.
It's more than that. It's closer to 30,000.
Well, I don't know.
I don't know if it's 30, but I'm sure it's well up.
I know last year or the year before when we did it, the overall cost for every student in the Berkshire Regional School District was right at 19,000, just under 20,000. And yet on school choice, we're only getting 5,000.
That's what
They're
they,
never going to change that.
it's,
Well, I would never
They
say never.
don't want,
that's a state.
if you decide to take that on, you're basically taking on subsidizing kids. So does your school board want to? If they match the dollar amount, then everybody would open up their doors to school choice at levels.
Sure,
Yeah.
I can understand what you're saying.
Yeah, but it's not an incentive program. It's a
Right.
little bit of an
It's a-
incentive,
Right,
but it's not.
I get it.
But at the same time, our towns,
Don't make it.
I'll talk Stockbridge, is funding school choice students at a cost that is dramatically lower than it costs us to pay for our own
If
students.
you take the school choice kids out, it drives up the cost
Yes.
per student of the kids that remain.
Of the kids.
So if you have 12 kids in a first grade class.
Right.
And you want to go, you could bring in 6 kids for school choice.
Right,
Then I understand what you're saying, but basically the argument is that they could take 18 kids and still have a decent class size, or say 15 kids, add 3 kids and go to 15. And they set, usually the school department sets a limit on how many kids they want in per class. And then if they're under that, they allow those to become the school choice slots. I assume that's what's done.
Just for your information, the budget this year for the operating budget for the Berkshire Hills Regional School District is 3.528 million, okay? 3.5 increase operating budget, 456,000, okay? That's because of the minimum local contribution has gone up for Stockbridge. Part of that is related to more students, but that's a state law. But when you take 3.5, 3.6 million, and our total number of students is 118, there you go. And
I guess the question more accurately is, if you didn't have the school choice kids, would you be able to lower the budget? And usually the answer is no.
Well, the problem is, once you allow them in first grade,
they go right through.
Right.
That's why the argument is fallacy. If we lowered it overall, if we had been doing it for the last 10 years, it'd be a whole different, you'd scale it.
Well, yeah, the point is, pick any grade. And if we had 8 school choice students come in and we have 15 students in that grade level, we now go to 23 students. If we didn't have school choice, we would have 23 students, which would probably be able to be handled in one class, under one teacher. You add it up, with those two, you're
That's what-
probably going to have to break it up and go to 2 teachers.
Question is school choice creating additional costs or
Exactly.
just
Exactly. Those are figures we should know.
just extra supplement?
Long-term, it's additional.
I have one extra comment to make. We are all talking about having young families come with children. And here we have 7 new youngsters being a part of our community. So it's this way.
You can't have it all
You
ways.
can't have it,
No.
yeah. It's, what are you gonna do? It's the way it is at this point.
You know,
There is
remember
an
when it wasn't
answer.
that
There is
way.
an answer.
Yeah.
And the answer, it's out there, but not resolved. The answer
Right.
is consolidation
Right.
of Southern Berkshire and Berkshire Hills.
Yeah.
And they're not there, okay? And, you know, how for 1,200 students, you can't get, and Southern Berkshire must have a third less than that,
Sure.
you know?
I just, the thing that I get disturbed about as a taxpayer,
Jim, I get it.
no,
Yeah.
is the idea of hiring a public relations person.
Yeah, I
at
saw
that kind of
that.
a salary in a school district this small. We have more residents in the town of Stockbridge in our town, more residents in our town than are in the Berkshire Hills Regional School District. How many students are in the district? 1,200?
Yeah.
We have 1,700 population. We have a town administrative staff that does an outstanding job. They don't seem to need a public relations person. I don't understand why the school needs a public relations person.
Because they're gonna wanna sell something
No,
coming down the road. I agree with you.
What they want to do.
It's what that's
What they're
about.
looking to do
It's sales.
is to
Come on.
sell the building of a new high school.
Yeah.
At whatever it is, 10, 12 million, I have no idea. That's what they're looking to do.
Let's talk about 100 million.
So whatever the number.
100 million.
100 million.
They're not going to sell that if taxpayers understand that just hired a $50,000 position, which once it's there will not go away. Okay?
about right.
That's the problem with government. And what's going to happen is now when we ultimately get the regionalization, guess what? They're going to need a second public relations person.
Yeah.
What about spending money on the education of our students?
But to get to that, they gotta sell this. That's how all that stuff works, like it or not.
This is the biggest item in our budget, education.
And there's no discussion on it.
Well, that's my point.
No,
Why don't
it's
we
not.
have Peter Dillon?
None of us
and
have
or the
kids
chair-
in
Can I
the
finish?
school
Diane,
system.
Diane, can I finish, please?
Oh, I'm sorry.
Why don't we have Peter Dillon or the chairman of the board of the regional school district or the Stockbridge representatives on that board come to a meeting? And let us fire questions and let them make a presentation about their budget and explain why they need a communications director. Explain what the pros and cons of having kids from other school districts come into ours or go in the other direction. I just think we spent 20 minutes talking about problems with the school board and the school district, and we're doing it all by ourselves in the dark. I think we need a presentation, or at least a discussion with representatives of the school district, it seems to me.
I agree, because in my opinion, it seems as though we show up, we go through our finance committee meetings, there's a school budget, there's minimal discussion, and that budget just, like other things, but it just seems as though the school budget grows exponentially, and we don't get any opportunity to question and dig into the school district the way we dig into these. And I think we owe it to our town to be digging into that school situation from the cost standpoint.
And you assume that the school board, the board that runs the district, is doing that, but they're not reporting back to us.
Well, if they are, I'm
That's
not,
correct.
you know.
Let me ask you a technical question. If the town of Stockbridge voted down, hypothetically, the education budget, capital and operating, we can't do that. We have to, by law, have a minimum local contribution for schools, don't we?
Well, you're above, I believe I'm not sure, but I think you're above the minimum contribution, but by yourself, you can't shoot down a regional district. I think it takes, I don't know what's in the agreement for what it would take, but I would assume if it's like the capital, basically Great Barrington carries enough that if they pass the school budget, it passes.
Right.
Regardless of what the other two towns say. So.
In all the years that I have attended our town meetings, never, ever has the school budget, school information, school anything been defeated. It's always been passed because of the attitude of the residents of Stockbridge, always.
I think the point is well taken, that I don't think it hurts to have a representative of the district make a presentation to the finance.
I agree. I think it's just
I
worth
agree.
discussing.
Yeah.
I think we owe it to the town tax. Yes, they vote that. But how many of them are happy voting for it? We don't know. But more importantly, let's at least get the answers to some of those questions.
Oh, I agree with you.
Is that an unreasonable request?
No, of course you can ask them to come.
Jay and I have in past couple of years, before the COVID stuff, he and I have attended school meetings.
Yeah.
And we sit there and listen and yada, yada. And then the last one I think we did was upstairs, which was
Yeah, but they
very
didn't want
good.
us
But
involved
they
because we
didn't-
asked too many questions.
Yes, that's
Okay.
correct. Yes,
That's part of the problem.
that's right.
That's why we're not
That was the
involved.
last one.
Yep.
That's right.
That was discussion of potential regionalization, wasn't it, when we asked a lot of questions? I think we had a meeting up here on that,
It was 2 years ago.
quite a,
Yes.
before
I
COVID.
gotta get to a couple
Okay.
things.
Okay.
Thank you.
Finish up today.
Michael.
Thank you all.
Thanks, everybody.
Michael, we adjourn.
What's the status of the Averitt Road Bridge? There's been no work on it in almost 2 weeks.
So I have I'll send you their updated schedule. So we are waiting.
They're working to a schedule.
Yes, yes.
So they have time before completion, so they don't need to be working? Is that the idea?
No, but I think there's some pieces that are happening that need to be clarified with the engineers and stuff. So there's been some back and forth.
Okay.
Thank you, Michael. Thank you.
Yeah.
Okay.
Did we adjourn?
To vote on it.
Are we over?
What? Adjourned.
Vote on.
Is it, did they?
Down, I wrote it down for 125 already.
Okay. I don't think you
Thank you.
have any opposition.
No.
Should we turn this off?
Do we have a gavel closed, please?
Make a motion, we adjourn?
I don't think you can.
No, we didn't.
Adjourned.
Can you hear us?
Thank you.